then I will begin. Okay, dokie. Heidi ho, everyone, and thank you for joining me for Trading Buddies on this Monday, the 11th of the 11th, 2024. Those of you who understand what the 11th of the 11th means, in particular to Australians and New Zealanders, it's Remembrance Day, and we remember those who have served in the wars before, and some of them who gave their lives, of course. So in deference of that, I won't have a minute's silence, but I do give them a big nod and appreciate their service 100% to give me the life that I have. Okay, I cannot see my control panel, and that really does annoy me because I don't know whether we are streaming or not. If you can hear me, guys, it would be great. If you could put yes, I can hear you in the chat box, that would be fantastic. Now I have a control panel. Fantastic. All right. Those of you here for the first time, whether it be on the socials or in the room, fantastic to have you on board. And I'll briefly explain before the London session opens exactly what we are trying to achieve. I should share my screen and show you two charts. One of them is gold and one of them is pound versus the, hi Mohammed, pound versus the US dollar. And what we're trying to achieve here is on the minute chart, we're trying to scalp. Now, a scalp is simply getting into the market at support or resistance and trading for a short period of time to get some profit in the bank very, very quickly. And on minute charts, that does happen very, very quickly. As a brief explanation as to what I'm trying to achieve here, I've got two sets of Bollinger Bands on my charts. Those of you who don't know what Bollinger Bands do or are, I'll briefly explain that as well. But here's how you set them up. I'll get rid of them off my chart, off my pound chart, and show you how I set them up. So we go on an MT4 chart to insert indicators, go to trend, and then Bollinger Bands. I'll do that again. Insert indicators, trend, Bollinger Bands. So select that. That will come up with an order, well, not an order box, but a parameters box, if you like. You want it on a 20 period, that's fine. Shift is 0. Standard deviation is 2 on the first one, and I'll color that black. You can color it whatever you like, make it as strong as you like. Then we do exactly the same thing again. Insert shapes, not shapes, indicators, trend, Bollinger Bands, but this time we change the deviation to 3. So 2 becomes 3, and I want that one red. Red for don't want to go outside that area. So what we're looking for is price to touch the red line or close on the red line or even beyond the red line, preferably not beyond the red line, but on or touching the red line is fine. Then we're looking for 2 candles to close above the black line. So here's one, here's another. So you would have entered the market here and you would have put your stop loss here had that touched the line. It didn't. And that's the crucial part. Has to be spot on to give you an entry. I can see questions bounding in here. See me. Thank you, Gary. Thank you, Su Ming. And that is all. Okay, got it. Righto. So to give you a brief example of what we're looking for, let's go to this chart here because I can see a couple of examples even today. So here we've hit, touched or closed on the 3 deviation standard Bollinger Band. Then we've closed below the black one, which is the 2. So there's one close and there's our second close. below the 2 standard deviation line. So we would put our entry here and we would put our stop loss above the swing. Now, my current rule, and mind you, we're still in development stage of this, my current rule is if that price goes beyond the swing, I would cancel the order. In this case, that would have been OSH1T. Why did I cancel that order? Because look what happened. But then the very next time you got a touch on the 3 standard deviation, you didn't get a close above and you got a lower low. So no trade there. But then you got this one closing on the red line, this one closing above the red line, the black line, sorry, and this one closed above the black line also. So you would enter above that candle, stop loss below that candle, and away you go. Now, the rules of taking profit that I currently have in place are I take my first profit at 0.75 to 1, as you can see in my order box here. And at that point, I would close half of the position and move my stop loss to entry. That means it's a winning trade, full stop, no matter what happens, right? Then the target is 2 to 1. No holes barred, that's it. So as soon as I hit 2 to 1, out, done. In this case, don't know if that would have happened or not. You certainly would have got your 0.75, 2 to 1. Let me see. There's your stop loss. So 12, we're looking for 24, and we didn't get it. But we certainly got our 0.75. So it's a winning trade, just less than what we would like. But that's okay. And here's another one. Touched on the 3. One close, it is above the 2 there. And the second close above the 2. So you'd went into there, you put your stop loss here, and you easily got 0.75. And I would anticipate you easily got 2 to 1 as well. 5.9, yeah, easy. And so we wait until we get another opportunity. Everyone got that? Know what we're doing? Any questions?
Clear as mud.
Hello, mate.
Hi, buddy. How you doing?
Is that as clear as mud, was it?
No, that's good, mate. Actually, I've got a FTSE chart up and ready to go, but there's nothing just yet. But if you
Okay.
bring up the FTSE, actually, it's really sort of explanatory about what we're looking for here, right? We're just looking for that close under the black line,
Yep.
to see if we can take the short on. But it's currently on a bit of a motor to the upside, so we don't really need to do anything just yet.
Mohammed, the mid-black line we don't care about. No, you can get rid of it if you want to. And you can do that in the settings. That's no drama. I don't take that much notice of it, no. I don't know why I don't get rid of it, because it's not relevant to the strategy, no. Okay, so we're going to close on the 3 standard deviation line, looking for a close below that particular number.
Yeah,
Wow, split, isn't it?
yeah, I mean, it looks pretty good. We might get it in the next few. So let's watch this one, because actually we're 20 seconds in. You gonna put this trade on? If
Oh yeah,
if it queues,
there is
obviously.
that, isn't there?
Yeah. So we're looking for about a 5 pip drawdown here.
Now, guys, if you use, I'm using Traders Toolkit here. If you use it, you won't find that it's available to do this particular exercise. I've had to change the settings to allow it to happen, and really, I've just called it Trading Buddy set. What it actually means, there's no close below the 2 there, right? So no drama. What it actually means is you've got to include the FTSE, because it's not really what's loaded into that is what's on the market scanner, right? And the market scanner doesn't include the indices. Looks like we're going to have a close below here.
Yeah, pretty hot market today.
We need a new order. We'll go with 1%. Need to change our TP1 to 0.75 to 1. And we're going to close half. Looks like we're definitely going to get one close below the 2.
Yeah. There you go, mate.
Don't want 2.2. Now we need a second close below the 2 to take the trade. Now, this is my version of someone else's system, right? Now, their system would be in now. So they would, as soon as you get a close below the 2, they would trade that. My conservative self says, not so happy with that. I'd rather see a second close to give me either a bit of follow through or a lower high. Either one is happy. I'm happy with.
Yeah, low high would be good, wouldn't it? This is sort of some of the challenge with it actually, because obviously the lower high would be the ideal scenario here, but as it kind of stretches down, it's yeah, going to get closer to that support level, isn't it? Which is the only issue. But if it sticks around here, we might be okay. Right, we're closing in 5 seconds, mate. Here we go. Closed up.
Okay. So our entry, why haven't we sold? Why haven't we sold? I pressed the button. It didn't do it.
Don't worry, mate. Don't worry. It's still a decent exercise just to sort of see where it would have.
There's the entry. There's the stop loss. And TP1. Is 3/4 of that, which is about 2 and 0.25 or something. Yes. 3/4, I said 7.5 is what we're looking for. So 81, 21.7. Right about there. I don't know why that didn't. Oh, here, finally it's come up.
Oh, it's okay. So it's live.
No, my little order box is asking me now. It wasn't there when we set the entry. It's now asking me if I want to take it. But it's just popped up. So maybe the 1 minute chart and these order boxes are not quick enough for that.
On a
Perhaps.
delay.
Because that was a good 5 seconds or more.
Yeah.
Before I got the confirmation of the order.
Actually, yeah, it was actually more like 30 seconds looking at the time of these things.
Yeah. Well, we're going to have to work that out, obviously. Maybe we're just going to have to do it manually.
Yeah, if we can do the calculations, why not? Because this is looking pretty good now, isn't it?
It is indeed. That looks like more like 1 to 1 than 0.75 to 1. Entry. Stop loss is 9.2. 3/4 of 9.2 is 6.75, not 7.75. Okay, now I've got it. So 6.75, I think we've already hit it. Oh, so close. 6.75 is 8122.5. Right there. Which is
I mean,
pretty
when you
much
look at that,
bang on.
yeah, looks pretty good as well because the support level is quite nicely tucked in underneath there, isn't it?
Here.
Yeah.
Yeah.
Yeah, it looks like it's going to get drawn into around about there. But
Where's our 2 to 1? We'll assume we've hit our target, our first target. 9 point something becomes 18 point something. So it's a little bit ambitious. 8111, which is there. No, which is there. Was no point saying, can you see that order box?
Yeah, we've spoken since the election, haven't we, mate? Yes.
Right. Well, it was too late, so I've got to say no now.
Yeah, don't worry about that. Don't worry about that.
Right.
We're still tweaking. It's not a problem.
Yeah, there's
Um,
your TP1 anyway.
yeah, we haven't spoken since the election, mate. Actually quite a lot went on last week. You know, when you sort of think about the markets, we had rate cuts, we had Donald Trump put into office. Um, we had actually rate cuts from two central banks. So the Bank of England cut rates, as did the Fed, and obviously
Well, he not.
Donald is in office, but stuff has just gone mad. I mean, you see Bitcoin, and in fact, Dogecoin was the craziest because Elon Musk is kind of part of Donald Trump's team. The price
Right.
of
Yep.
Dogecoin just went crazy.
I was surprised more with what happened on Friday than I was with what happened on Wednesday.
Oh yeah,
Yeah, I thought the what was I in? Aussie something?
yeah.
Aussie Single, which was going along just fine until Friday. Bang. It just it capitulated like something had shot it.
What was the data that was released?
Well, it would have been FOMC.
Right, right.
Not that you would expect it to really make too much of a difference to that pair, but it certainly did.
Well, I'll tell you the interesting one this week. You know, as I said to you, messaging you yesterday, the really interesting one now becomes the Euro CAD. And we talk about this actually on IFP when we sort of do the IFP weekend. Euro CAD from around about now until around about the end of December has got the strongest potential, strongest possible seasonal bias you can pretty much find for the Euro CAD for the year. Um, and the CAD and the Euro CAD's right on support. You know, when you look at the daily chart, we're sort of looking at a consolidation area. And actually, shall I show you my chart, or have you got something to do there?
I have got gold coming. It's looking
Okay,
pretty
all
close.
right.
So
Let's stay with you then for now. Um, but yeah. So yeah, gold. We're looking at a short here, are we?
yep.
Okay, cool. Um,
See if we
we'll
can
see
get
if we
it
can
to
get that.
actually fire.
We'll see if we can get that on, and then we'll talk about the Euro CAD because the Euro CAD is in a buy zone effectively, and there is a bias to go long on the seasonals. And what I'm really looking for with the euro is the unemployment data first and foremost. Now, if you look at you know what's released this week. Now, I'm just looking at down at the euro to see what's released this week. Let's see if there's any significance. There's I suppose non-monetary. ECB, yes, there's employment change, so that could feed into it. Now that could be interesting. They're preliminary numbers, and GDP as well from the Eurozone. So there's a few things that might give this one a boost. Lagarde speaking. The metric that I'd prefer to see is an unemployment, the actual unemployment metric, and that isn't released this week. There's nothing hugely significant from Canada either, but I think here we go. Did you get your? No, you didn't get gold.
No, no close below the two guys. That's why we're not doing anything.
Um, but yeah, but that's the interesting one, mate. The Euro CAD for a long. And when you're done there, we'll have a look at it because the actual chart is definitely one of interest.
Yeah, I was when I went through my currency indexes, it was kind of weird. The only thing that looked remotely, oh, hang on, is is one of these things. Is that a close below or is it a close on here? It's a bit
Yeah, I think.
crazy, isn't it?
Oof.
We'll go with close below, but
Yeah,
we may not get a second one. We shall see. If we do, we'll
yeah,
just hit sell and look for a prompt.
good idea.
But yeah, that prompt came up too late. Yeah, I looked at the as I always do on a Monday morning, and all I could see was dollar. The only thing that looked positive to me was dollar.
Yeah,
What looked the most bearish was the Swissy.
yeah,
What a shocker it had last week.
yeah, yeah. And I wonder whether the Swissie's now going to have a bit of a hangover from what's been going on up until this point since they started raising interest rates a couple of years ago. You know, I wonder whether we sort of like now we're starting to see the genuine change in sentiment towards those risk-off currencies because you know, and it's the same with the yen. You know, the yen's another one that that you'd look for some potential selling off the back of Donald Trump kind of coming into power and you know
Yep.
the confidence that certainly has emerged so far anyway. Oh, here you go. You might get a trade here, mate, if this one closes where you want
Yeah,
it
I'll
to.
call this the second close if it does. Looks like it will.
Okay, you got 5 seconds.
There we go. Got that prompt. I've now got a prompt. Are we in?
It says invalid entry
Where's it saying that?
on the actual on the market window, the order window.
I can't
Yeah,
see it.
just under
Where?
enter live,
Where?
just above the word sell.
Oh, okay. How can it be an invalid entry? Enter. Oh, maybe I've got to tick that. All right, we've got a better price if that's the case.
Swings and roundabouts. What's that? Invalid stop loss.
Yes. Stop
Uh,
loss 0. Okay. Stop loss is crikey. 267160. Gee whiz. How many pips is that? I'm going to get a good price here in a minute. So it's going to, let's say it's going to be 5 pips. Right, we'll see how we go. Hey, what happened?
Did was that an order or was that live?
Well, it looked like an order going in, but there you go. Guys, obviously we've got a little bit of work to do on how we trade this, right? I've got no idea what happened there. Absolutely no idea.
It's the minute
It
charge.
looked
You know, I
like
think the problem is the that window is making is confusing everything, isn't it? Hot market though, mate. I mean, you know,
certainly
looking around,
certainly including me.
you look across the board. The FTSE is actually the FTSE playing a bit of catch up. Actually, should I take the screen for a bit? I've just got
Sure.
a few things that we can have a look at here.
Now that
There we go.
one wouldn't have worked by the look of it anyway.
No, I just want to
So
see
that's
whether
our
I
null.
should be.
We need another setup. I'll call you back if there's something.
Yeah, no worries, mate. Right, let's talk some longer term things.
We only
Um,
hit TP1 on the FTSE too. That was it. So a small
yeah,
winner.
yeah. Well, I was just, you know, we're going to look at the FTSE really quickly here because the FTSE actually is looks like it might be playing a bit of catch up. You know, the FTSE had a pretty sharp sell off into the election and after the election, but I think this is more to do with what's going on with the Bank of England than to do with Donald Trump. But if you look at this on longer term timeframes, the FTSE actually it's pretty good. It depends where you're going to sort of like get this trend line in, but it looks like there's one around about there. If you consider these are pretty much closing prices here, there's the most recent low. It's broken this the sell off from that, which is the concerning aspect here. But I would really like to see it under this trend line if we're going to sort of suggest a big sell-off. The only thing is I can't find why. I can't find why the FTSE would sell off, except for the fact that the sell-off seemed to coincide with the Bank of England, but also the budget from the Labour Party. The market didn't seem to like the budget very much, and it does seem like the budget and the government is going after big business. So the FTSE may well stay suppressed. It may just be getting a bit of a Donald Trump bounce, but I don't think that that's going to last. I think we might be stuck in either a range, or we are going to be starting to come up to these levels and then start to push back down again. So FTSE's a bit of a sell, but it isn't a buy zone, so not a place to be taking that on board.
You
As
know
you
what I
said, yep,
when I did all those comparisons last week
yeah,
with what happened post Trump in 2016, when
yeah,
there was follow through for 2 months, and those 2 months in my world means that he took office 2 months after he got elected, right?
yeah.
So the market went one way until he got elected. Sorry, until he took office, and then completely the reverse of that after he took office. So
Well, do you know, I
yep,
think that's a really interesting point, mate, because actually, I'm gonna I'll bring it up in a minute. I'll just find it first. I've got a chart of Bitcoin that I think is getting quite
okay,
interesting now. But I'll bring it up in a moment. They're just crazy, really, when you sort of consider the moves that we've seen in the crypto market over the last 12 months. Some of them have moved, 700% and 1,000% and all this sort of thing. It's been kind of back to the old way again, you know.
yeah, right. Actually,
So the crypt.
I've got a visitor on the weekend.
Oh yeah.
Simon,
Oh really?
yeah, Simon and Ainsley are coming down to Tassie for
Oh
the
nice, mate.
yeah. So I'll
Oh
ask him how he's doing.
yeah. Well, you'd imagine pretty well.
Well, you know what he's like.
Yeah. Yeah, he's pretty good at the crypto stuff. So I'm gonna show you this chart on Bitcoin, and because Bitcoin interests me because my brother's into cryptos, and he's been waiting for this one to kind of do well. But this is the line I'm looking at right now. There. And when I draw that line, then it starts to suggest to me that there's another one that's coming in here. So it looks like an inverted head and shoulders. When you look at this on Bitcoin, it looks like an
Yeah.
inverted head and shoulders. Now that drags. Now everybody's calling for 100,000, and this is why I think this line's interesting. Because if this line is genuine, let's put it out into the future a little bit. There. If the line is a genuine line, and it looks like it's going to have some sort of significance, that's going to lead, depending on when it happens, December or whatever, that leads Bitcoin up to about 90,000. Now, that I think is significant because if there are people that start getting out at 90,000 while there is still those that push for 100, there are going to be plenty of buyers that will absorb all the selling at this particular stage. But it might well be that the area that ultimately they start getting spooked out, and then it starts to turn around. So I'm looking at Bitcoin around about 90,000. Now, the other reason I think that might be significant is your analysis about the the
Follow
presidential
through.
bounce.
Hmm.
And it's possible that we get. This is November right now. We probably possible we get into December that takes us up into this area, and then if the what you've discovered actually plays out, then if this is in this area in January, then I think that it might well be worth looking to see whether these assets are going to actually start to sell off the back of that. So maybe 100,000 needs to be a little bit more, treated with a bit more caution if you are a Bitcoin bull. But that's going to be, time dependent from what you've discovered, mate. That's going to be time dependent.
Actually, can you go back to 2016 on that?
Yeah,
That might be
that's
worth a look.
here. This is 2016. This area.
And specifically the first week in November, which I think was it was only one day difference. I think it was the 6th.
That's this one here. The first week in November that's this red bar here.
Okay. So it did follow through.
Yeah.
For how many weeks? Are they weeks?
Yes, these are weeks. Well, it took it up to January the first week in January.
There you go.
Yeah. And then interestingly, look at that. You know, the upper trend line as well that was generated from from June.
But the interesting
The
part about that is it only went down for 3 weeks or 2 weeks,
Yeah.
but it did reverse. Interesting.
Yes, it did. Yeah, it did reverse, and you know, I think what I like about these as well. If you look at these upper trend lines, they do seem to play a bit of a part in resistance for Bitcoin. You know, particularly if you're a bull and you're looking at this stuff, then this is probably quite important because trying to figure out where it comes to. Well, it has been relatively good on the downside, but I'm trying to really figure out where it's going to go to is no mean feat. But these trend lines are pretty good. You know, the upper trend lines are pretty good in predicting where it might go. And we got the same thing here. So that high
Yep.
was the sorry, it was that one, wasn't it? June. That was the June highs that were being looked at there. And when we look at this one, of course, in a very, very different price point now, mate. Um,
You could say that.
yeah, so if you think about where we were back in 2016, we're talking about down here when Bitcoin was at $1,000 pretty much in 2016. I mean, I'll actually make that a bit more accurate. So we're giving you exactly the right numbers. But I mean, it's just crazy. An asset class, uh, doing that in your lifetime is just madness.
Yeah.
Uh,
Particularly when it doesn't actually exist. Doesn't
$700.
there's absolutely no substance to it. It's well, and when you think about that, there's no substance to the American dollar or the Australian dollar or the pound either. They're a bit of paper. There's
No, I
somebody's
mean, I suppose the thing is it does have functionality. But look at the context here, mate. This was at 700 in 2000. It's the same time in 2000. So 4 years ago, it was at 700, and now it's at 70,000. So if you had been, if you had the wherewithal just 4 years ago to put $700 on this, it would now be worth $70,000.
bugger.
I mean, it is just crazy, isn't it? When you sort of think
It
about
is
that.
crazy, crazy, crazy.
Um,
And
going
some
on
people, of course, did that. I'm not sure they'd still be in now, but some people would be absolutely life changed, because of
yeah,
that.
yeah,
But as a trader, if you've picked it up in the last, well, again, Simon, he's picked it up only a few years ago
yeah,
and has done very, very well from it.
yeah. Sorry, I made the mistake of saying 70,000. It's now worth
700.
80,000. So so $700 would have made you 80,000, 80,000. So if you'd had a lot of confidence in this and put on a fair chunk, actually, you wouldn't have even needed to, would you? I mean, that's such a crazy game. I mean, the moves on the way there have been hair raising to say the least, but it has been just an unbelievable move, and you're looking at
Indeed.
really sort of so the year after looks like when it really starts to go. So next year would by the same token, and if this continues on that same trajectory as it did 4 years ago, then we'd be looking at 7 million for one Bitcoin in the next 4 years. So yeah, just astonishing, really.
I
Um,
think I think I've got some money. In fact, I've got probably 3 or 4 accounts that I've got no idea what the password is, got no idea whether I've got any money left in them. And that was the whole issue for me.
yeah,
That there's no centralized exchange. There's no safe place you can put your cash, in my humble opinion. And like I said, I
no, we
know I
seem
can
to
log
have,
into one. It's
yeah,
the latest one. I think that's doing okay. But I think there's 3 that have got a few grand in them that I'll never get back because I can't trace it.
yeah. Do you know me? I think it's one of those things with this is that you kind of need to keep it off. As soon as you buy it, you just want to get it off and put it in your own, put it on your own key. So you own it, you actually own it, which makes the sort of like, the farming and the, because that was a big thing. The big thing with cryptos is the yield farming, but it makes the yield farming just a lot more dangerous. But that would still be relevant. I mean, I like the idea of crypto. You've got this you've got this ledger that can't be broken. So that's what I think is really powerful about it. This is Ethereum, so Ethereum sort of looking at that same idea. Doesn't even go back to 2000. Oh, it does go back to 2016. 2016 Ethereum. So just in November, that was worth looks like it was under 12. So it was around about $22. Now it's at 3,000 for Ethereum. So that's kind of gone up the same thing. Solana is one of the more crazier ones. But there's just this is really where we are. This is the kind of this is the situation and the world that we live in, where where this stuff, as you say, hasn't yet got full adoption, is worth just unbelievable amounts of money. But I think it just kind of goes to display the imagination of human beings, because there's really, there's lots of good ideas. There's lots of bluster with this stuff. And if you go to I watched some of the crypto presentations, and it's like a Formula One display. Loads of glitz and loads of glamour, loads of money spent on the actual presentation of it, and it kind of lures you in. It makes it sound like there's a lot more going on than there probably is. But is it poppies? It could be, and you don't, even if this thing only lasts another decade, it would still be classed in that poppy field, really, wouldn't it? That the not poppy, sorry, tulips. It would still be sort of like classed as the kind of a similar craze to tulips.
Poppies sound more the case. I think those who were on poppies somehow, but
so that's that, mate. But yeah, just
because I wasn't in it, maybe, I don't know.
Yeah, I mean, I would have loved to have been in some of this, but I mean, it's I find it difficult, and really, I'm just glad that my brother's making some money out of it, and he's doing well. But we've got our own area that we're interested in, mate, and I think that's absolutely fine. I think there's stick to what you know, stick to what you believe in, and everybody else, just be happy for them if they're doing well. So
that doesn't mean there's no room for different things to enter, and that's for sure.
Yeah,
I don't have a problem with that, and we're constantly working on things like that. Well, I wish I was constantly working on it, but unfortunately, the business gets in the way. Hopefully, sold by the end of not the end of this year, probably, but by mid next year, hopefully that won't be the case, and I'll be able to spend a lot more time on.
Yeah, well, I think exciting times ahead. I have to say, I think there's some really exciting times ahead. I think there's some really sort of interesting research kind of going on right now, and yeah, as I say, so the FTSE now. I just wanted to also sort of talk about the Euro CAD, because this is where the Euro CAD sits. Now, where I find the Euro CAD really interesting is that firstly, you've got this weekly support area here, which is multiple. You've got this horizontal level here. This is right at the bottom of a trading range. You've got this upper trend line kind of coming down, which is intersecting where price is. You've got this lower trend line going up, which is getting very close to where price is. This is a buy zone, and it is at a very, very strong seasonal period. It's in a very strong seasonal period. Now, the real driver for this is the unemployment numbers. When unemployment goes higher, as we discussed last week, when unemployment goes higher in the Eurozone, it tends to, ironically, push the euro higher. Now, unemployment is now the reason that it's getting even more sort of interesting now is that unemployment is at a multi-year low. It's not, it's just kind of going lower and lower and lower and lower, which means that the next move, logically, not the next move, but at some point, the move will bounce potentially quite violently in the opposite direction. Now, that could come from, Donald Trump might sort of like start introducing tariffs. It could come from the fact that we're not really out of the woods when it comes down to inflation data. It could come down to the fact that There's lots of holes in dams that are literally just holding back the water.
Mm.
And I think that this is sort of like something that we should not get tied up with. The Donald Trump bounce has not changed the market. All it's done is just change the sentiment, and the sentiment obviously is really bullish right now. Everybody's really sort of euphoric. How long that lasts will probably last as long as the sobering numbers that will eventually come out and hit the market, which suggests that actually we're not out of the woods. There's still lots of fixing that needs to be done, and the euro could well be one of those currencies that starts to see some of the data being a bit more negative, and as I say, that the unemployment numbers, when they come in negative, they tend to push the euro higher. So we're kind of waiting on that, but we are in a buy zone, and that's really the sort of at this stage, that's the bit I wanted to point out. We've got a seasonal bias long, but
Yep.
no real reason fundamentally to go long. But there may well be things that we should look for to change to maybe bring in the seasonal buyers, because actually it lasts until end of December, so we've got plenty of time. We've got a month and a half before we need to be thinking about buying this. But I think it's interesting, mate. This is the one that interests me the most at this stage. I've still got lots more work to do on some of the other currencies, but this is the one that interests me the most at this stage.
Well, certainly a higher low here gets me extremely interested to trade that as a range trade. Looks great.
Yes, yes, yeah. It's on the money, isn't it? It's on the level.
Mm.
And I guess that's the thing. When you're looking at this stuff, you were looking for a bias. Now the bias is the seasonal aspect to it. So that would be something that would push us towards looking for buy signals in this. But it's not history which pushes this higher. It's the fundamental data now. And the fundamental data, as I say, that I'm most interested in. There are others, but the one that interests me the most is the labour market, because it's so tight. It's not been this tight in such a long time. And we've just come off the back of really the COVID bounce, high interest rates, now lowering of interest rates. Donald Trump just getting into power. He's already kind of talked about the fact that there will be tension with trade between the United States and Europe. So there
Well,
are
everyone.
some things.
There's going to be tariffs for everyone.
Yeah, yeah, yeah. He's going after everybody basically. Yeah. So there are going to be sort of some things that could push this one down. And as you say, I've got a trade on the pound Swiss, the one that we discussed last week.
Yep.
And the pound Swiss, I'll quickly show you that. The pound Swiss I think is interesting because with this, you seeing this screen over here?
Yep.
Yeah, cool. So with this, the possibility here, and we should be looking. Let's just change this to blank. Oops. With this, what we should be possibly looking at here is the longer term picture, because this really started to fall during COVID, and the change in interest rates and everything else that kind of started to happen. So because that's the case, that starts to suggest, and we also discussed fair value for this, and this is way under fair value,
Yep.
way under. It's like fair value, if well, so I'm calling it fair value. I shouldn't actually, because that's inaccurate. Way under the median. The median sits somewhere in this area up here. But even looking at what we got here, it's around about 1.18. So there is room for this one to go. Now I don't think I'm going to stay in it for that long, but what I'm trying to do with this one is use a method where there is profit taking that you discussed last week,
Mm-hmm.
where there's little bits of profit taking going, but trying to hold the longer term position, because actually with this, not only do I think that this is going at least to here, that is really what I'm going to aim for, but what the other thing with this, and I think ultimately it's going to go right up into this area here, so hit these highs again. That's what I'd really like to hold it to, and whether I do or not, I don't know. But what I like about it, of course, is the swaps. This one actually pays to hold. And when you kind of find a potential trade that pays to hold, you just want to ride it for as long as possible. You know,
Yep.
if this one goes nowhere for 2 years, but it's paying you every day, then it makes a lot of sense to just stick in there and hold on to it. You know, the differential between the UK interest rate and the Swiss interest rate is quite large. Now you discussed a lot of them with the Swissy, and I think that it's possible that we're getting a kind of risk off, a risk on sort of environment. And look, CAD Swiss, as you rightly pointed out, is up. Kiwi Swiss is up, and the Swissy looks kind of weak right now, and this is where the seasonals then start to come and play an interesting. You've got to make sure that you understand that the seasonals are just a suggestion. The seasonals on the Swissy are the strongest of all. So
Well,
you've got strong Swiss and Euro CAD strong. So going kind of back to that idea, we can't just go, well, let's go long because the seasonals are saying we should go long. It just tells us historically that's what tends to happen at this time of year. But right now we've got a very, very weak Swiss franc. Now that could change at any time, you know, depending on what Trump does and many other things. But for right now, that's what we're looking at.
yeah, you got a
So,
lovely false break curve there too. If you take the low on what around about the 10th of September, maybe
yeah, this one here.
that one. If you take that
Yeah,
and extrapolate that through the low around about the 12th of October. No, up,
right here.
right up
This one.
that low. Yeah,
Yeah,
that's
yeah,
classic false break signal for
yeah,
me.
yeah. Yeah. Which does, you know, when I look at the charts on the Swissy, that there is a bit of a suggestion that we might well get a little bit of a level here, you know, and that means that we could actually sort of mess around in this area before we start going higher. But you know, this is a daily chart, so that could take a month or so if you sort of like consider this area here. If there's any kind of equilibrium, if there's any kind of um, uh, equal kind of dynamic between this one. This has got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's around about sort of 10 or 11 bars. So we're looking at 2 weeks worth of movement in this area. If this is going to give us some symmetry, that's the word I was looking for. If you're going to look for some symmetry, then that's what we'd be looking for over here. So maybe an inverted head and shoulders before we take off. And that does suggest we could be range bound, but it looks like we're headed here first. So I quite like that as
Actually,
well.
on that chart,
Yeah.
let's take symmetry out of the equation. Is there
Yeah.
such a thing as as a left-hander's cup and handle? Because that's what it looks like right now to me.
Yeah, it does, doesn't it? No, there's not, but there's
I've never
probably
seen one before that I can remember, and no doubt I've seen them, but I've just never taken any notice of them. But that looks very clear.
actually, mate. You know what? I'm saying no, there's not. But it's so long since I've read about that stuff. I'm now starting to doubt whether that's true because actually that would make a lot of sense. You're absolutely right, and most of these patterns are reversed. Head and shoulders reversed
Hmm.
to an inverted head and shoulders. M topping patterns the same as W bottoming pattern. So yeah, you would think that there might be. I will have to come back to you on that actually to just to give you a more accurate answer. Um, because there could be, and if there's not, then it might be
It's,
called something else.
yes, it's not detracting from our theory anyway.
No, no, it's not. No, I mean ultimately, it would still look to me like there's a chance that this is going to be a hold point, which does suggest that you know you're going to get some bars where it just travels. Maybe between the high and the low, but maybe just sort of like it travels really small. It just stays at the top. But just seeing this as a potential resistance point makes a lot of sense, and
Yep, sure.
that's what I'm looking at right now.
Happy
Anyway, mate, we've
days.
probably gone on a bit long, haven't we?
No, that's okay. I'll just very, very quickly do a summary of what we saw today and go to. Are you good with George?
Oh yeah. Well reminded. I'll bring him up.
Okay, well, all these things have changed. I shouldn't do that to old people, you know. Change all the metrics all the time.
What's that? Oh, Zoom. I know it's terrible, isn't it?
Yeah,
It's kind of same but different.
dreadful. Yeah, exactly. I think my screen should be sharing very, very soon. But yeah, there it is. I think. Righto, here's what happened. We traded gold and well, we tried to trade gold, but the order box didn't quite play ball, because we saw the touch and close actually on the 3 period, well, 3 deviation line on the Bollinger Bands, and then we saw 2 closes below the 2, that one there and that one there. So we put an entry short here. Now, I don't think this would have worked, given, although on the order box, the stop loss is 1 pip above here, so it maybe would have worked on that order entry, and that's something we have to take on board as well to see where we need to put our stop loss. Is it bang on the candle, or is it above the candle by a pip, or whatever it is? So, as Muhammad said, it would have hit the 2 to 1 had we got our stop loss above here, obviously. But that's the order that we need to take notice of. Okay, there was an entry, genuine entry, second close below the 2. Where do we put our stop loss? Obviously, in this case, it had to be a little bit higher than the top of the bar. No trade since. On the FTSE, we traded the FTSE short also, if my chart will come up. And we traded it short here as a second close below the 2. Right, so we closed on the 3. We got 1 close below the 2. We got 2 closes below the 2. Entered here, hit our first take profit, which is 0.75 to 1. Barely, but it did. And then that was all we got out of that, because it came back and hit our stop loss.
This has crashed, mate, but I'll be right back in.
No worries, mate. Which was here, because we moved our stop to entry. So a very small, well, a small winner, 0.75 to 1. There. On the pound, something else came up that I need to explain to you guys. What the hell's that doing there? Go away. So on the pound, I'll just expand that chart. There we go. Here, interesting, because we did touch the 3. We didn't close anywhere near it. We did it again here, closed pretty close to it, but no close above the 2 standard deviation line until here, right there. But we gone below our low, or the point of contact on the 3, right? So that absolutely makes that null and void under the current rules. However, look what happened. Close above, second close above the 2, and on it went, and would have given you 2 to 1, no problem at all. So these are things that we need to take note of, that may or may not be relevant ongoing. But what we do know at the moment is if it does close on the 3 and close above the 2, that's when we need to go. And this one did not do that until here, until we created a new low. So a lower low in this case actually worked. No trade at the moment on the pound. On gold, no trade at the moment. We're consolidating. One thing I wanted to show you before we do go to George is, my goodness, we've got a lot of things going on here. Here's where my analysis came from this week. The dollar, it is getting close to resistance, no question, but I can't see any reason why it would stop until it hits that. Maybe there's not a lot left. Aussie dollar, just on top of support as it was last week, but that shock on Friday when we got the FOMC statement put a bit of a stop, I suppose, on the Aussie going back to this trade line. Where it goes from now, I'm not too sure, to be honest, but it is at support. Canadian dollar did retest the breakout level of this consolidation area. Perfect doji, almost impossible to say where it's going in my technical world. The pound closed underneath this support trade line. I'm probably thinking that it's got more to go, more downside for the pound. Swissy, this is the worst candle of the week by far. It's an absolute shocker and suggests to me that there's no way this can, sorry, that's not true. There's every way, every single time, because the market will do what the market will do. But this looks extremely bearish to me. I think any rally on the Swissy is a sell. Kiwi, I think that's still got a little bit to go as well, but we're now trapped in the middle of this wedge, having played out a false break. The yen, my goodness me, it's actually outside of the dollar, the most bullish bar from last week that I can actually see. It is a reversal bar. Can I actually see it reversing from this point is the question, because we've closed underneath that clear support level. So although it does look to me like it's a bullish bar, and I know it's a red body, but it does look like almost a hammer. It's not right in the right position, in my humble opinion. So watch this space with the yen for sure, but you got to be brave to trade it. Here's why I think the euro's in trouble, because it's broken below this support area. It's broken below this support area as well. And it is a clear false break, like I point out every time it happens. We get a break, we get consolidation back underneath the retest, and that bar last week is not friendly for the euro. But I hasten to add that these are measured against the US dollar. All of these indices or indexes are measured primarily against the US dollar. Yes, they do throw a few of the majors in there as well, but euro US dollar in my world looks like the best trade of the week short, as does second best Swissy, dollar Swissy short. To put that into some sort of tradability is quite difficult, because they've obviously both gone very, very quickly. Euro dollar, that's euro dollar. The weekly chart is suggesting, as is the index chart, that bullish, bearish engulfing bar off the monthly pivot will have some sort of follow through. I chose not to trade that this morning. I thought maybe we just get a pull back to that trend line. And if we did, I think that's an excellent point to trade this short. Get your stop loss above last week's candle and the monthly pivot. So limit entry order on the bottom of that trade line for me, euro dollar short. And what was the other one? Dollar Swissy. I haven't got one of those charts up. Let me find one. Dollar Swiss, quite popular at the moment, up the top. Where are you going to buy it? Desperately need a pullback here on dollar Swissy to be able to trade it. Some would say it doesn't matter, just get in, and I get that. It's just not my MO. So I'm desperate for a pullback on dollar Swissy to go long. Maybe I'm going to miss the boat there, Ash. We'll see.
Yeah, maybe so, mate.
Pardon?
Maybe so. It's a tricky one, isn't it? Now the Swissy, because it's started to move a bit.
Oh, has it?
Well, I mean, only sort of over the last few days. I mean, not
Right,
sort of
okay.
today. Yeah.
Yeah, cool. The interesting part about euro dollar and that pullback that I was talking about, that I'm desperate for, may well come. It may come as, wow, that's very, very flat. But if I were to see price climb back above that level and retest it without closing below it, I think there's an entry there today. But your target, my target, would have to be the daily pivot. Don't want to go any higher than that. I think there's money in here somewhere. And if that does set up, and I just happened to be in front of the charts at the time, which is unlikely because I'll go on to bed. But if that did set up, trade to the daily pivot, I think is potentially where I'd like to be. So that's where I'll leave it, mate.
Cool. Nice one, buddy. All right, let's put George on. Thanks, guys, for joining us. Don't forget you can come on mic and camera if you want to speak to us live in the show. But we will do it again next week, and if any of you guys want to come on, then you are more than welcome to do so.
Yes,
Here
you've
is a bit
probably
of
got.
George. Go on, mate. Sorry.
you've probably got ideas that are well outside what we're thinking, but we're more than happy to go there and say, well, okay, gee, that's got merit, or no, we wouldn't go there. Either way, we're happy to have it. Have a great week
You
ahead,
might.
guys.
Here's George.
Good day, traders. I trust you're well and you are enjoying our trading buddies. And thanks to Jeff and Ash for having me on the show. So we are carrying on having a follow-up with the markets that we've been tracking for a while now. DAX 30, I mean, last week was interesting in terms of the happenings on the political front in the US with the US elections. And this is what the market looked like for us. So this is the week that has just taken place. And we were here last week when we were talking. So we are within this trading range, but is contained, if you like, by the October trading. And both bulls and bears, because we're in the middle of the trading range, have an opportunity to break out of this trading range through the month of November and into December. So we've got to wait to see if that's going to happen, or if the rest of the year on the daily chart is going to be contained by these two extremes. Right now, middle of the trading range, absolutely no one, showing much strength, market changing hands continually. So which forces are going to take control? From the bulls' perspective, they're saying, well, we've just got higher lows, we have the opportunity to smash through that. The bears are saying the same thing. Well, we created a wedge top here, 1, 2, 3, higher high, double top, lower high, head and shoulders, whatever you want to call it. And the bears, of course, want to accelerate down. But until we actually see that, then it's two-sided price action. If you trade in ranges, you're going to have to wait to get up here to sell, and down here to buy. But if you're a swing trader, best to wait to get more information on this market. Brent crude, tight channel that we spoke about last week. And, we did say at the top of the channel, if you wanted to sell beneath here to get to the bottom of the channel. If you want to buy, wait for the breakout, pullback confirmation. The breakout, very weak, non-existent confirmation, no confirmation at all. So this particular market, bearing in mind the forces that create a tight trading range, is bearish. Failed breakout of a channel, we have a double top that's here. As far as if you didn't have the channel, if you didn't see it, you can clearly see the double top. Micro double top here. Bears, of course, would like to continue to sell. So if you're thinking of, I want to do something in this market, and the forces are favoring the bears, then it will be best to wait to see if we get higher probability trade, wait for the market to close, break out beneath the close the trend candle, then you can sell. Lower probability market, you want to sell the breakout beneath here, then you can do that. And if you're doing that, ask me what do the stop, probably get a measured move stop, and don't put your stop up here. That it would be unwise because it's likely to get stopped. But you could put a measured move stop, which could take you to these levels. And because you want to take a breakout trade, hoping to get rewarded with earlier profits. High probability, wait for the market to close beneath these levels, give you a trend candle and sell. If they give you a doji, do nothing, just wait until you get the information that you need. Silver, amazing. Everyone celebrated this surge up here. Price action, we said, well, let's get confirmation. Didn't get confirmation. Macro double top, lower high, good for the bears, breakout pullback. Fantastic for the bears. They have a big problem. That tail was a problem for them because they had a chance to then follow through that. So market favors the bears for the simple reason we came off the micro double top, a high of 2024, lower high, good follow through, another lower high, good follow through. Bears are probably thinking, well, okay, breakout, we could have done more, pull back. We have still done more. We didn't, but we're an inside candle. That's a breakout mode pattern because it's a converging triangle, this candle inside that. And these kind of patterns typically favor higher probability the last trend candle. So this would favor the bears. So if you are a bear, think, listen, I want to sell this market because of the inside pattern. There is the pattern. If you want to be selling that, most prudent stop that I would put is a measured move of the pattern, which brings the stop up here. That's conservative. If you want a more aggressive stop, you put it here, but be prepared to get stopped out because you're selling out of this pattern. Higher probability, of course, is to wait to see the bears confirm it and just start to accelerate down. If you're selling here and you put a measured move stop, if you get the follow through, you can tighten your stop and then wait to see if you can smash behind this beneath its low or go sideways. Probability is favoring the bears at the moment. For bulls, you need to wait. Bulls probably think, well, I think the market is still bullish. I'm going to wait to see if we come down here, get a failure by the bears to get beneath this level or something like that. You know, whatever it may be, failed breakout, do doji bull candle, then I can buy and hopefully get to the top of that range. Euro yen, I mean, we spoke about this tightened range. We spoke about these bears from July still controlling the market, and they are evidently still controlling the market. You know, tight trading range, bulls tried, failed, tightened range, and we have this beautiful candle breaking out of this tightened range. And the bears are saying, well, now we have a lower high. We have defended the breakout here. Bulls have tried, you know, they failed every time to break out. So bears, they can see this, but they're going to be selling. I'm going to sell down here if I get it. And I'm going to say, well, you know, I'm going to put my stop above here because that's the level we're defending. So I'm hoping that the bears that are defending this will defend the market. So put your stop here if you want to sell that and hold to see if the bears are strong enough to get down here. So that's my thought on that. If I was a bull, if I was a bear, if I was a bull, you know, if you're in any trades, you should be out of the trades at the moment, or when you're just holding your stop here. You know, if you got in there, holding your stop here. Otherwise, just wait. You know, if the bulls are strong, they're gonna reverse this, create a micro double bottom, decent enough reversal. So if we say, hey, hang on a second, the bears have failed. Now we have a 2-bar reversal here. And then bulls will have to start to think, okay, 2-bar reversal, if you've got it. I can see this level that's been defended. I'm going to wait to see if we get above that. That's a more conservative bull. An aggressive bull would buy, put a measured move stop down here. But at the moment, our bulls are favoring the bears, so that's what I'll be thinking. If I was a bear, cable, pound USD, good for the bears, channel, good for the bears, tails, problematic, big trading range. Now we are caught in this trading range. If the bears can break out beneath here, they want to get to the low or break below the low of August 2024. If the bulls can get above here, they want to erase that bearish price action. But clearly, although we have an inside pattern, we are within this clear trading range. We need to wait to get out of this trading breakout, confirm it for us. Then you can take a breakout trade or wait for a pullback. Breakout, take a breakout trade or wait for a pullback. So on the daily chart, that is where we are. Well, thank you very much, trading buddies, and I hope you enjoy your day. And for me, on behalf of Jeff and Ash, it's bye-bye for now.